All right, it is Friday, December 16th, 2016. Do a quick run through of the positions. Today was a very good day, and these are the days that make some of the bad days worthwhile because I pretty much did nothing and we made almost $4,000 today. So that was nice. I actually got up, watched the market for the first little bit while I played with my son. Nothing was happening. I went back, took a nap, and got up, took my wife out to lunch with the baby, and then we played in the afternoon. And in the last 10 minutes or so of the day, I closed off a portion of this NDX butterfly we've been looking at. And so it really didn't change it very much, just slightly reduced the deltas and took a decent chunk out of theta since I'm closing one of the entire spreads here. But um, I learned a while ago, and some of my mentors had the saying that when the market hands you a gift, why don't you go ahead and take it? And so I did. So we got a nice little day where the price action helped me out, as well as volatility really coming out of the market. Quite a big drop in volatility. So when volatility is dropping, I'm happy to buy back in some of my options. And then if we get a volatility increase at some point in the near future, then I will look to open some new positions. But while prices are cheap, let's go buy something. And so all I did was close out one of these put verticals, the 47.75, 45.75. You can see here, I bought in one of those. And then I bought in one of these 48.50, 49.75s, which is where my call positions were after these rolls. So I just closed it as another iron condor. And the ratio is about the same. Obviously, I'm getting less theta. So I took some of the credit out of this, so I can't make as much as I would have, but also reduce my margin and reduce my overall risk. So I'm okay with that. And as a reminder, 2 days ago, I think it was Tuesday or Wednesday, this position was down about 5,500, and now here we are down about 3,000. So of course, being down 3,000 is not a great achievement, but it's really nice compared to a few days ago when it was quite a bit worse. And that can show you what will happen if the market does stay fairly neutral in a sideways range for just a handful of days and volatility comes out. These positions can make a lot of money pretty darn quickly. It's just the days when the market moves really large that you can lose the money quite quickly. So that position looks okay now. I'm happy to take a piece of it off and now let this sit a little bit, and maybe make it back over to positive land, which could be great. But we'll just see what happens. We'll just let the market dictate, and we'll keep our expectations in check. So let's hide everything in January, and then look at February. Again, this is an amalgamation of a short call and what started as one of my back ratio things, and then I've sold some puts along the way. So this one, even given the fact that the NDX dropped about 0.75%, so not 3/4, I'm sorry, 1/3%. It was down about 0.38%. So not a big down move, but the market came down a little bit. The volatility really came out, and we made $7,000. 7,000 would be great. Made $700, but $700 while I played with my son and took my wife to lunch. I like this business when things go well. Again, nothing really to do here unless it really starts to decline. And if you remember, so this is where we'll see if that whole technical analysis theory plays out, where I was leaving my positions to the downside, to the short side, as we were rallying up towards this 4,900, thinking that it might hold as a resistance level, which it did not. And we had a pretty dramatic rally. And now here we are coming back down towards 49, and then I'll just lean this a little bit to the upside and suspect that it might hold and continue the upside rally, and then we'll see. Do I have a strong conviction that that is the case and that sort of analysis works? No, but it gives me something to hang my hat on. It just gives me a way to think about the market and gives me a line in the sand to put into the mix of how I make a decision. Of course, there are other factors. This delta theta ratio that I like, I use that as part of my decision making process. The days left to expiration, where the current P&L is, Am I comfortable with the risk? There are a whole lot of factors that move into things. It's not just the chart, but that is one little thing that I will throw in there just to help myself make a decision. Just to if I need one little piece, if I'm on the fence, should I or should I not do something? Sometimes I'll just use that as an excuse to force myself to take an action, because usually taking the action is better than not. Which is actually a good lesson for life in general. So if you're ever in doubt, take the action. If it turns out to be a massive failure, you've learned something, and you can take that failure and apply it to the next action that you take, and keep doing that long enough, you're going to be successful. Okay, back on to options, which is actually an exercise in continuous failure, if you want to be honest, or at least that's been my experience, and many people I've talked to. That's how this works. You fail a whole lot of times, and then you figure out what. It's almost like if you're a carpenter. If you hit your thumb with a hammer enough times, pretty soon you'll figure out ways not to do that, and then you like to be hitting a nail, and you can be successful. So it's success through failure is one way to look at it, which might sound negative, but it's not. It's a great way to learn. Okay, back on point. Russell, I did absolutely nothing today with Russell, which is fantastic, and we made almost $800. So once again, hooray! That's great. And I do have orders in, good to cancel orders to buy back this vertical spread, this 12.40, 12.20, which is currently priced around 85 cents. So I'll probably buy it for around 40 to 50 cents, and we'll just close off that downside risk, and then we'll slowly take some of these other things off. We'll take off this put vertical. We've got a naked call here. Actually, we've got the 1390 is a strangle that I can buy back at some point. So that would, and see, I like this position. That looks really nice, doesn't it? So we've got defined risk on the upside, can't get hurt on the upside. We have nice defined risk on the downside. So this is really nice. And look at what happens to the margin. So I take that off, it's at 11,000. So then I free up $10,000 of capital. So this is actually something I am going to be looking to take off soon. I'm gonna keep my eye on this price. So I don't know if I would shoot for $25. I'll do some analysis over the weekend. $20 might be a little ambitious to try to bleed off another third of this. So maybe somewhere between 20 and 25, maybe 22.50. So I'll look at this over the weekend and make a decision and start working this order. But I will keep an eye on this for sure. I would love to take that off, and then just try to hang on to the last little bits for another couple of weeks. SPX January, very similar to Russell, looks pretty good. That's the exact same scenario. I actually have the order working right now. So here's a good to cancel order to buy back a strangle, the 2300, 2200. I put it for $15. I doubt I'll get it for 15. Right now it's currently trading for 22 according to the platform. So I'll probably come up somewhere. And if you are a position trader or a day trader, or you have an experience with a trailing stop type of thing, or you have a stop loss, is the way you think about it, you could think of this the same way, and you could just pick a number, and so you could say, okay, 25. So I would love to buy this thing back at $15, but if for whatever reason the market starts to move around next week and trend in one direction or another, and this strangle expands up to $25, well, I'll just get out. So then you could think of it that, okay, I'm risking $3, 22 to 25, to potentially make 7. So there's one way to think about it. But if I take that, if this actually filled, and I'm gonna uncheck the price, it'll be the current price, so I don't make the P&L look a lot better than it actually is. But if we do take the strangle off, then again we've eliminated a lot of downside risk. We still have a couple of naked calls up here, but it doesn't make me as nervous, even though we've got some big upside moves lately. And once again, the margin drops from 52,000 almost down to 32. So we free up $20,000 of margin there, which we could redeploy somewhere else. So again, that's a really nice. That's the downside. Strangles have a higher statistical chance of working. They've got a lot of great advantages theoretically. The downside is they are very capital intensive, and this is in a portfolio margin, which if you're not sure what that is, go search and look it up. So portfolio margin is very highly favorably margined, so this is about as good as you can do, and still it's very capital intensive. Going into a position where everything is verticals, or what's called defined risk, you definitely free up capital. You're using more units or more contracts, so you're paying a lot more commissions to control the same amount of capital. But the way I've done the math, you actually are saving margin. But that's a whole other topic. And then finally, let's look at February for February for SPX, and similar. So we've got this longer term back ratio thing with the extra put. So today pretty much P&L did nothing, even though we had a bit of a decrease in volatility and SPX was down about $4, so it really didn't move. But didn't really make much, didn't lose much, nothing really happened. That's still okay by me. That's a decent day. So that is pretty much it for today's position review. We will come back next week and hope for our Christmas gift of the year, which would be a week of almost nothing. Very tight range days where the ticks barely move around and people are bored and people don't know why the market won't do anything because this is so frustrating watching paint dry. Well, that would be awesome because we would make several $1,000s and we could close a bunch of positions and free up capital and wait for another opportunity, and then we could take our wife out to a nice meal and feel good about ourselves the way we ended the year. So that would be great. Let's put out some positive energy. There's some positive vibes for next week. Let's hope that happens. Thank you for watching.